I'm Austin, and this is Validated. Welcome to the inaugural episode of Validated. We're trying to do something different from what you expect from a show about Web3. Each episode will bring you conversations exploring the technology and philosophies behind Web3 with people who are rethinking the internet and our world. Today, I'm speaking with Ryan Selkis. If you've been following crypto for a while, or even if you're fairly new to the space, chances are you know who Ryan is. He's best known as the founder of Messari, a crypto research and data firm. Ryan has been a crypto investor, writer, and advocate since 2013. That's almost a decade. He's part of the small cohort of people who actually have a long-term enough perspective on the industry to help us zoom out from some of the current market noise and make sense of what's really going on in the world of crypto. As you might expect, Ryan is hopeful in the long term of blockchain. Throughout this conversation, we found some paradoxical silver linings in the tumult of 2022. Millions of new users joined the space, Web2 platforms expanded their support for Web3, and interest from developers has never been higher. At the same time, well, you've seen your portfolio. We also explore how DC's views of crypto are changing and discuss his work as an advocate for the industry. Let's get into it. Ryan, welcome to Validated.
Thanks for having me.
Yeah, first time we've done this. Glad we get a chance to do this. I'd love to chat a little bit about the ideas and the philosophy of crypto that originally drew you to it back in the day.
Yeah, so I've been full-time in the space since 2013, and that original cohort was Bitcoin only. And it is true that there was a strong libertarian streak within the community. I remember first learning about Bitcoin back in 2011, and in the US, we had this issue known as the debt sequester. And basically, it was one of the first really ugly congressional battles that I remember in my adult life, where they just could not pass a budget, right? And basically, debt sequestration was going to be like across the board, 20% cuts to the budget if they couldn't come to an agreement by, 11:59 on this date. And sure enough, 11:58 comes and they say, "Oh, just kidding. Like we're going to file a 90-day extension," right? And the next week, the U.S. debt was downgraded for the first time ever from like AAA to AA. And it was a big deal for the markets. It was a big deal in general. And I was already kind of like libertarian leaning in terms of some of my political, like early 20s, like political philosophy, like Ron Paul esque anti-war type libertarian, kind of that whole streak appealed to me. And I remember kind of digging in at that point on the US dollar and kind of its long-term viability and kind of learning about the history of reserve currencies and fiat currencies in general. And when the debt sequester happened, I learned about Bitcoin, ignored it, bought gold, shorted the US Treasury ETF. And that was the absolutely correct thesis and literally the only way that you could have lost money on that trade, right? Fortunately, I came back to it a couple of years later. And at that point, Coinbase had launched, the Winklevoss twins had revealed their ETF plans. And then very importantly, Ross Ulbricht and Silk Road was shut down in kind of mid 2013. And that's when I really started to dig in and happened to be transitioning from my first startup, which took a couple of years and then fizzled out. And I had some free time on my hands. So, I got into it just as a curiosity and then, kind of lucked into it from that kind of philosophical standpoint, and then got fully red pilled after reading the white paper and started writing about it pretty much immediately. And then, here we are 10 years later. And obviously it's quite a bit broader than just Bitcoin at this point.
So as someone who kind of got into it with a little bit of this libertarian streak, I talked to a lot of folks who were kind of around in that era, and they have trouble recognizing a lot of the values that maybe originally drew them to crypto nowadays, especially folks who are really who for Bitcoin, that was their gateway drug into the crypto space. How does someone like you, who obviously that's the stuff that attracted you originally, was this sort of full self-sovereign idea, but you've stayed hopeful about the space. Like, how do you view the differences between where crypto is in 2022 from like a philosophical standpoint versus where it was in 2013, and what pulled you in then?
I think it's actually really healthy to have the degree of skepticism that we have in the industry across, most different ecosystem participants. And I think the don't trust, verify ethos has stayed pretty consistent, but you've seen like different forks in communities. And there are some exceptions to this. I don't mean to paint everybody with a really broad negative brush, but most quote unquote Bitcoin maximalists are much newer. You look at, Vitalik was an early Bitcoiner, Eric Voorhees was an early Bitcoiner, I was an early Bitcoiner, dozens of us, were early Bitcoiners because that's the only asset that really mattered. But we still saw the value and the potential of things like Ethereum. And then later, some of the other, layer ones and DeFi and NFTs, we're curious about it, but we're also very deeply skeptical about the motivations of folks that get into the space that are new. And it's almost like they have to prove their stripes and actually demonstrate some degree of kind of long-termism and kind of mission-driven focus before, they're trusted or taken seriously. And in that end, I kind of feel like every time that there's a crisis within a given community and they go through their trough of disillusionment and then come roaring back stronger and more resilient and at a higher high or more decentralized or whatever you think about the right rubric to be, that's when it's almost like you've earned your stripes. And you can tell that people are kind of in this for the long haul and not just taking shortcuts or basically trying to create some kind of parasitic relationship with what is otherwise, I think, a really optimistic ecosystem and technology that's an optimistic bet on the future. I think we always get maligned during the bear markets and the crashes, but if you look at the folks that are responsible for the crashes, they're always the folks that were the hangers on and the malignancies in the market anyway. They're very, very rarely the builders and the people that kind of came in with a really mission driven focus. I'm not going to even say his name because I've already committed to that for the new year, but certain people were 100% direct about not caring about crypto. It was just an asset to trade. And you could tell because they told you that all they cared about was making as much money as fast as possible for whatever other end they had. And so, I for one, and I know many others were very deeply skeptical of that type of mindset, for certain individuals that we saw, do very well in 2020 and 2021, but then this year it kind of fizzled. On the other hand, you look at some of the builders, like the year that Ethereum had was tremendous with the merge and kind of the success that they had and the success of kind of roll-ups. I wrote about this in the annual report, but I kind of view this as like one of those formational, like foundational years for the Solana ecosystem, because you see how much is going on and how much is getting built. You've very violently shaken out the weak hands and had to kind of go through this crisis of confidence. But now it's kind of like a make or break year. And if you have the solid enough foundation, which I happen to think Solana does, in terms of developer interest, in terms of like innovation around the edges and infrastructure, then that's where you're really positioned for like the resurgence. And then in a couple of years, people that are open-minded will say the same thing about Solana that Bitcoiners who are skeptical of Ethereum now say about Ethereum, right? That's kind of like the crypto circle of life, if you will. There's a rise, a crash, and then do you have what it takes to get off the mat and resurge? And if you do, then it means you've probably got that missionary core and the folks that are really kind of committed to the long-term vision of what this industry could be.
I kind of love existing in like paradoxes because I think they're where the most interesting questions get asked. And, 2022 was one of those years because if you had no context of token price, you'd have thought this was the biggest year for blockchain yet, right? Web 2 companies started doing full integrations, mainstream adoption sort of started coming much more. The on-chain activity for protocols like Solana skyrocketed. Ethereum successfully swapped engines on the car while the car was still running. Like they did the hard thing, right? This was the year where actually, if you look at it, like stuff kind of took off in mainstream. And yet what we've seen is kind of the opposite of that if you start looking at the price, right? I don't think I've ever seen a place where the market story and the technology story and the adoption story are further apart, at least in recent memory.
In short, all the people and products that I didn't like are dead. And all the people that I liked and projects that I was excited about are thriving. So like, I can't remember a time that I was more excited about a year. And we track this with our reports on a quarterly basis. Our mission really, the product vision that we have is to create real-time financial reporting for crypto communities. So it's not enough to bitch about the SEC. Like we actually think that we can build a 100x better like information system for community traded assets. And we do reporting on all these different projects where you look at the price, they're down 75, 80, 90, 95%. But you look at the metrics, whether it's transactions, number of NFTs with distributed file storage systems, the utilization rate of decentralized like hardware networks, quarter over quarter, 50%, 60%, 70% growth. Stable coins, like quarter in, quarter out. November and December were record all-time months for stablecoins. USDC and Paxos issued stablecoins are flying, and they're closer than ever to being institutionally or kind of internationally recognized under given regulatory frameworks. those are the things that are like really 0 to 1 improvements in terms of like adoption and integration into the financial system. And they're not showing signs of slowing down. So the only concern I really have is, are people going to take this opportunity to kind of recommit and refocus efforts and discard the noise and the get rich quick shit and like all the other distractions and shiny objects that will ultimately be their undoing if they wait too long to fix it? Or is, it's kind of like, if folks that are listening work out, right? Like 2021 was a bulk year. And then, we had folks, get their ass kicked because they were a little bit too out of shape from the bulk year. And now this year is kind of like the next part of the Rocky montage where it's like, okay, let me get my ass back in shape. We're going to cut, and then we're going to be ready for like the much bigger fight and to get back at it. So I know some people will listen to this and think that I'm being sanguine, but the reality is I've lived through 2 full cycles now, and this cycle, like the end of it, feels so much healthier than the last 2. Right? In 2018, it wasn't obvious that there was going to be any tokens of real value or any networks that were going to have economics that made sense or applications that worked. And now you turn around and you've had all these like crazy and composable upgrades in DeFi and scaling solutions and inter-blockchain communications. Like crypto is not going to be uninvented. The biggest hindrance now is going to be, how can we actually demonstrate that this is like valuable tech that's good for society, so that we don't face just a ridiculous number of roadblocks and hurdles that are thrown at us from governments. Because I think that's kind of like the final boss stage that we're at right now, versus, are people going to care about crypto? I think that ship has sailed, and the answer is that people are, understanding of the potential of these technologies.
Yeah. So looking at some of those organizations that have had challenges through 2022, most failures we've seen, I think Terra is probably the exception here, have been failures of centralized entities and centralized exchanges. They were folks who were not primarily doing on-chain transactions. They were folks who were primarily transacting off-chain and primarily had obligations that existed off-chain. What do you think the future of these sort of centralized exchanges and centralized entities are? It feels like every cycle they get built up and then they explode catastrophically. And this doesn't happen as much in the traditional financial space. And this is kind of a real clash, I think, between folks who look at this space and think we need more regulation and folks who think we don't need more regulation. But it is a pattern that does seem to exist, that it's always the off-chain stuff that causes the problem for folks on-chain.
I think it's a bit of a false choice to have DeFi versus CeFi thought of, as kind of a black or white thing. I do think that there's a spectrum, and we've seen more of it this year. You've started to see some of the big DeFi protocols incorporate real world assets. I think that financialization and that trend is going to be a big driver of growth in some pockets of crypto in 2023 and kind of going forward. On the other hand, ironically, one of the most interesting integrations of the year was Ledger Live and FTX, right? Like Ledger customers were able to trade using the FTX order book and liquidity from their Ledger devices. Those customers did not get wrecked, right? Because the only time that they interacted with FTX was that moment of time that the orders were getting filled, right? And then the assets were like self-custodied and safely secured otherwise on like the individual hardware devices. Some people will just say, you know what? I trust my Fidelity account. I'm going to trust Coinbase as a custodian because they're well regulated. We know they're reserved. They go through like X, Y, and Z. And so in that respect, like good regulation, good oversight is really strong for the industry. It's a good positive for the industry for those centralized players. On the other hand, as long as you keep the bridges open between like peer-to-peer finance and centralized finance, and you kind of have a good balance, then people can kind of pick and choose what risks they're willing to accept, right? I'm willing to accept centralized exchange risk because I don't want to worry about my personal security and my personal key management, right? And for some people, like, I consider myself like this, right? Like I'm actually less concerned about like my ability to manage my own keys and more concerned about like a $5 wrench attack. So I am still going to prefer something like, Anchorage or Coinbase in many scenarios, because I know that that's kind of built in. And so you have to trust some institution or some product at some point with something like key security, but that doesn't mean that you should be giving up all of your autonomy and like all of your ability to interface with these peer-to-peer networks. So I think the fact that these different parts of the ecosystem are getting built up in parallel, it does 2 things. One, I think it's net helpful in allowing people to choose their own adventure, right? And whatever kind of user experience is best going forward. But it also creates a level of resilience and anti-fragility in like the downside scenarios because it forces more hostile actors, particularly at the state level, from being really effective with crackdowns, right? So it creates a little bit of a better game of whack-a-mole. And in the West, I think you can say that out loud a little bit more assertively because especially in the U.S. because we've got these First and Fourth and 10th Amendment protections, but in other parts of the world, like that is like an imperative, right? If you're talking about folks in high inflation countries or with capital controls, or just significant like geopolitical dysfunction, then it starts to feel a little bit more real, even for like the monetary and DeFi use cases, versus here in the US where it's like, oh, we're talking about hardware networks and decentralized social and NFTs. Like, well, yeah, because that's what can have mainstream appeal here because most people aren't worried about JP Morgan going under.
Yeah, I think that's such a good point, which is like I think we all basically trust FDIC at the end of the day. And like FDIC is an anomaly on the world stage. Most countries and most banks don't have that kind of government backstop on personal deposit accounts. So a lot of this tech, I mean, there's obviously a huge number of developers on Solana and other blockchains that were in Ukraine, and their ability to either, because they had assets in crypto, either leave and get their families out and still have access to capital, or stay and be able to buy stuff they needed to, even when the traditional financial payment rails weren't functioning and Swift was doing a bunch of weird stuff to kind of cut Ukraine off. Very, very interesting to kind of see the role of crypto stepping in situations like that. So one of the things I would love to talk a little about is as the interfaces between Web 2 and Web 3 become murkier, right? They become more integrated. Exactly what you're talking about, the ability to trade from Ledger Live hitting the FTX order book. What is the sort of role you see of public perception? I think if you deal with a large Web 2 company, the expectation is one of customer service. It's one of a dependable product that, like, if I can't send a tweet, I get mad at Twitter. Right? If I can't log on to a specific application, there's an idea of like someone needs to fix this for me. And the core tenet of blockchain is there's no one who can do this except me. How do you sort of think about those two cultures merging or adapting? Because they're on the face of it, they're fairly incompatible, just expectations that users might have for systems when they're using them.
I know I've been pretty public about this, but I think this is just such a failure of the regulatory state, right? To pick the right battles. There's this general misconception and misperception, I think, of folks outside of crypto that it's the Wild West and people are fighting against regulation and good policy and oversight, and it's complete nonsense. And and folks that are in the trenches know we're down in DC or we're in Europe and we're talking to policymakers. And yes, if the conversation is self-custody and privacy are going to be illegalized and peer-to-peer finance is going to have to go through a central like authorities registration process, the answer is no. Like, we are going to fight that. But why is that blocking good stablecoin policy? Why is that blocking exchange oversight and custodial oversight the same way that you would have in the traditional markets, whether you're talking about banks, securities dealers, or the like? So it really comes down to just treating like for like, but without kind of, throwing the baby out with the bathwater and really kind of crippling innovation in the sphere. And if you had some common sense on the part of the regulators, we wouldn't have things like FTX, right? You wouldn't have Mt. Gox. You wouldn't have, a lot of these centralized failures. And I think in many cases, like, their eyes are just totally off the ball. And I know I've been critical about the SEC, but this is the perfect case in point. I mean, Grayscale right now, the biggest asset manager in the world, they own 3% of Bitcoin and Ethereum. And they're in a tough spot because what's happening with this massive discount, their shareholders are underwater to the tune of almost $8 billion, which is more than FTX lost investors, right? So $8 billion worth of impairment, that's not Grayscale's fault. That's the SEC's fault for being obstinate and refusing to create any structures where either investors could redeem their shares in these trust products for the underlying assets, or more importantly, just approve a spot ETF instead of trying to block this obstinately for years, because what you're really trying to do is play a hostage negotiation role in making sure that you have oversight of the exchanges, and then maybe we'll let you kind of have these products trade.
Yeah, I'd love to kind of go into that a little bit more. What are the changes? Let's use Grayscale as an example here. What are the changes that the SEC could make that would have alleviated the situation a little bit more?
Point blank, a lot of this contagion would never have happened if they had approved a spot ETF after they approved the futures ETF. The spot ETF is, derivatives are based on spot, right? That's why they're called derivatives. And yet, a derivatives based ETF with a much higher fee structure was approved, a year and a half ago almost. And yet the spot ETF was continuously disallowed and blocked for reasons that seemed, arbitrary and capricious. And Grayscale is actually suing them over this as a result. But once those toxic assets and that product was out in the wild, and these assets were trapped, and you had this market dysfunction because of the SEC's obstinance, then it created this system of bad collateral that had a cascading effect across multiple different entities. So first it was Three Arrows, and then it ultimately trickled, into BlockFi, and then it again trickled into FTX, and that's a big reason that we had this credit contagion is due to this one product and the fact that it was used as collateral, and that collateral was toxic because of its illiquidity and all the SEC driven dysfunction around its redeemability. Like that, I mean, it's just basic math, right? And just like looking at the timeline of events to kind of show that this happened. And a big reason it happened was kind of due to this policy that doesn't really make much sense if your mandate is to protect investors, promote fair and efficient markets, and promote capital formation, which is literally on the SEC's website.
So do you think the SEC should have basically declined to approve a futures without a spot?
No, I think that both should have been fair game, right? It completely makes sense that both would be fair game, but I think it's completely counterintuitive to approve a derivatives product before approving a spot-based product, because the derivative is derived from the spot, right? So it doesn't make any sense at all. And I think they know that, but the stated reason is that there's no surveillance of the underlying spot markets. And what they really mean by that is we don't have SEC registered spot crypto exchanges.
Isn't that kind of a fair criticism, though? If you're taking a spot product and bringing it onto a regulated exchange, that the underlying market should also be within that same framework?
Well, I think you have to look at what happens with commodity-based ETFs that are spot-driven, like the gold ETF.
Right.
It's apples to oranges in that case. But the regulators are kind of jockeying for position because of crypto's uniqueness. Okay, on Coinbase and Kraken and other exchanges, you can trade Bitcoin, you can trade Ether, you can trade all these other assets. And now, like the long tails, some of them start to look like securities. So because some of them look like securities to the SEC, now it's this, we will not negotiate until like we have oversight type of dynamic. And then that's kind of created all these ripple effects. Good policy would have solved this years ago. But we have a pretty dysfunctional system right now, I think, in the US, and it's ironic. It's in some cases it's more dysfunctional in Europe, but in other cases, I think Europe is way ahead of us when it comes to common sense crypto regulation.
Yeah. So when you're talking to regulators or politicians about blockchain and crypto and Web3, there's a lot of harm that some individuals and bad actors have done this year, have done over previous years. What is the tenor of those conversations like? Are you in a situation where you're trying to sort of convince them that the net positive is worth it against the net negative of these bad actors? Like, what are those type of questions that you get from them look like around? Basically, like, are you asked to justify crypto's existence? Are you asked to paint a rosy future for them? What are those questions like?
Well, I think there's two separate sets of questions, right? There's questions and relationships with the regulators, and then there's questions of policy, which is, are we going to get, comprehensive legislation and kind of guidance in the US? And unfortunately, I think it's a long shot that we get comprehensive legislation in the US just based on kind of the politics of kind of post election day and the new Congress that's getting sworn in. There's really three things that I think we need to see in terms of guidance in the US and things that have to be driven by statute instead of just regulator guidance. The first, and maybe the easiest, the one that we have a shot at getting right in the next kind of year or two, is around stablecoins. It's because they're easy to understand. They're very important to the crypto ecosystem. They're also really interesting and important structured products that ultimately I think could extend like the dominance of the dollar and like the digital dollar. The other one, which is really where a lot of us were hoping we could get with the DCCPA, this Stabenow-Boozman bill that FTX had a role in kind of pushing, it was flawed in the sense that it was attempting to capture DeFi and put it under the same framework as kind of these centralized exchanges. And if we could just focus on like the centralized custodians, exchanges, broker dealers, I think that we could actually see some good policy, in the next year or two. That's still going to leave the number three priority, which is really where the rubber meets the road for a lot of crypto beyond Bitcoin. And that is, what's the definition of a commodity versus a security? What type of information reporting systems do we have? What is like the safe harbor or kind of the standard that we need to build to make sure that we can have innovation in tokens, but we still have investor protections? And that is a really messy middle to navigate. And frankly, it's one of the reasons that we started Messari, because we knew that this was going to take probably a decade for folks to kind of wrap their heads around and kind of build policy around, because there's no black and white solution. So I think we're in a bit of a foot race, us as a company, to basically demonstrate, can we and other kind of information players build like real-time financial reporting equivalents that are like 10x or 100x improvements on the Edgar system? Because if we can, you can kind of show your work and say, like, what you are proposing would be actively worse in terms of like information symmetry and in terms of the performance of these networks than what the industry has already been able to build itself, because all of this accounting infrastructure is public. The blockchains are public.
Yeah. So one of the things, I mean, there's this like great Twitter meme, which is that if cash were invented today, it wouldn't pass the Howey test, right? Which is, I think, a very funny oversimplification of what that would look like. But there is some truth to the fact that like legacy products are legacy products and they're grandfathered in. I think there's a lot of desire for an overhaul of securities legislation in the United States. There's this, we have to really start from the beginning. We have to rewrite this stuff. I think if you go to most interest groups, they would have that exact same criticism about whatever piece of legislation impacts their industry. I have friends who work in the power industry and like they're, or work on environmental regulation, and their criticisms are the same as like, we need to rewrite all of these laws. And I think what we've historically seen from Congress is very little appetite for wholesale rewrites. And instead we get things like the way the ACA was done is sort of a bunch of weird loopholes, and the way budget reconciliation is done nowadays, it's all a bunch of weird loopholes to get stuff passed. I think, there's a real, as I mentioned, there's a real strong desire to do something that's sort of wholesale, let's rewrite the thing. Barring that, are there smaller changes that you could see making a bigger impact that maybe don't get to the core of the issue, but they at least allow more of this development to move back on shore?
I'd like to paint a rosy picture. I think the answer is probably no. I think we're likely going to be in limbo the next couple of years. I mean, there's a lot of us that are trying to spend time with policymakers and kind of have these balanced conversations, not selling out the industry, but kind of listening and kind of proposing solutions bidirectionally. But I think the reality is that we've been set back so far by the events of last year that are the repercussions are still ongoing, that we're running out of adults and warm bodies, so to speak, to like make the case on behalf of crypto. Like it's kind of sad, to be honest with you, but I mean, if you just think of like all of the really big organizations that have had a fall from grace or that are under some degree of pressure, it really has been just a relentless barrage of bad press, underperformance, kind of broken trust. And the only thing that I think is going to heal that is time. So, we're actually arguably better off right now in engaging in a little bit of trench warfare and like strategic retreat to just regroup and hopefully just build our way out of this. If you were to wave a wand and get policy, quote unquote, solutions tomorrow based on our performance last year, I don't think that anyone would like them very much. So, unfortunately, we probably are in like a litigation and retrenchment phase that is going to last a couple of years. And frankly, I think it'll probably last through the presidential cycle in the US.
I think one of the questions that a lot of people have is like, what keeps you so hopeful about this? We've talked about a lot of the challenges and a lot of the difficulties, specifically with regulation and sort of more mainstream adoption. You're still here. You've been here for a while. You're fighting a fight in DC. Like, what keeps you hopeful about this?
Every time I use a product that works, that people 6 months, a year, 2 years prior had said was ridiculous or was moon fumes or vaporware. There's just been countless examples of products, companies, people that have been underestimated and then turned around and just wildly outperformed and built something that was transformative and really important for the industry and something that was open source, right?
Yeah.
So many times when there's like some 0 to 1 leap, it can be used by anybody, and then that is like a new step on the staircase that people can climb, and everybody can kind of climb, and you can kind of pull them along with you. That's really powerful in terms of the momentum of the industry and like our capacity to build and kind of move things forward as an industry. So you have a situation where DeFi, NFTs, DAOs, decentralized hardware networks, layer ones, layer twos, bridges, like these things did not exist 4 years ago. Like none of them existed. And if they did, it was by months, right? If maybe Uniswap. Aave had just come off of like their fundraiser. I don't actually remember when they launched. Crypto punks were released, but then they were forgotten about for 4 years, and then they resurged, when everybody started speculating on them. So, I think now that those are kind of mainstream and they're out of the bag, now you're going to have the next crop of people that build around that, and it's going to be the next crop of people that are building things that either look like toys or people say this is never going to work, and here's why, and then they're just going to chip away at the problem set, and then you're going to have something in a couple of years where voila, all of a sudden something just works, right? I'm sure you've done the same, right? The first Uniswap transaction, right? The first like trustless bridge transaction that you do, minting an NFT, right? The NFTs like that we have today, these PFPs, like they're like frankly, I think they're stupid, right? But they're really good statements of work. I don't care about the whether it's a Bored Ape or a penguin or a punk. Like I don't care about what the pixels are. I care about the fact that this is something that is now out of the sandbox and people are starting to like imagine use cases for far beyond like what the V1 looks like. And part of it is I have the luxury of just having like seen prior cycles. And so I just have a lot more conviction about where the real risks are. And to me, the real risks are not that this fizzles out, it's that it's stomped out. And for that, it would be because we made one too many blunders and lost one too many degrees of trust from like a broader like society level. So when I say build our way out of this, like I kind of think that building products that are going to be useful for society, it is like an existential need right now.
Yeah, looking forward into that like multi-year time horizon, do you think crypto is going to be able to maintain its sort of moral and ethical stance that it has today? I am consistently surprised that open source is still the standard, that interoperability is still the standard. I think if you go back to like the early days of like the API revolution at the beginning of Web 2, there was this idea that websites would suddenly become open and interoperable because everyone would have an API, and you could move data from one application to another, and like a lot of that language, like it feels like it's back in crypto. It's very real in today's crypto. But as this world expands and as it comes more mainstream, do you think that sort of ethical framework and moral framework can survive contact with a publicly traded company that has a incentive to maximally extract profit?
I think so, and I think the transition will be, it'll be slow at first, like slowly, then suddenly, that sort of thing. So, we haven't really hit the J curve in terms of, disruption for very large companies, but I think that's not going to happen all at once, right? It'll be different pockets that happen. Bitcoin is not going to replace the U.S. dollar, right? But it might very well become a reserve for certain countries and kind of geopolitical issues where people either disenfranchised or their monetary system don't work. Or maybe it'll be stablecoins, ones that you have that are algorithmic or that are maybe outside of the U.S. jurisdiction, so that you're going to have redeemability of them, versus be subject to like the search and seizure of some U.S. authority if you're in Argentina and you're trying to use a stablecoin. I think there are a lot of things, a lot of areas where it's not a foregone conclusion that crypto is going to be successful, but if people are able to kind of build for target personas in the right target markets, and we're able to make iterative progress towards those goals, I think it becomes too big to fail in certain regions or certain use cases. And that's you just need to keep the fire going and the kindling going. You don't necessarily need it to turn into a complete inferno. But when we do get to that point, it's going to be because the product is so good that nobody cares, right? So the the Blockbuster employees were really broken up when Netflix ate their lunch, but the Blockbuster employees just went on, either worked at Netflix or went to another job, right? Barnes and Noble versus Amazon. This is kind of the circle of life in terms of capitalism and invention and innovation in tech. And I think that tech and crypto is neutral, but ultimately, I'd argue that there's a lot more area for human contributions and development within crypto than something like AI, for instance. I think AI will be much more disruptive to like the workforce, the labor force, and to like companies than crypto will be. I think crypto is more of like a slow, gradual integration and something that's ultimately additive and one and one is three versus like truly, creative destruction that we're going to see potentially in AI and some of the upgrades that brings.
Yeah, that's really interesting because, like, I think if you look back at the mobile transformation, like, mobile changed the ways that we interact with software. It changed our expectation for software. It changed the way people date. It changed all sorts of things in our lives. But like, one of those biggest ones is like pre-mobile, you kind of had to be responsible for how you used the internet. Like you had to be careful you didn't go to weird websites that like installed all this weird crap on your computer. And like there's still a little bit of that on desktops. But like the assumption there in most mobile software now is either Apple or Google is responsible for your safety. They're mediating your experience with the internet by having built mobile in a fundamentally different way. But then you compare that to something like an electric car, and for all Tesla's, shine, an electric F-150 is basically the same as an F-150. Yeah, you charge it as opposed to putting gas in it, but like fundamentally the experience of using a pickup truck is not radically different since it's electric. Where do you think crypto falls on that spectrum? It sounds like maybe you view it as a little bit more of like a back-end innovative technology that doesn't necessarily change that paradigm of how software is built, but just changes underlying how it works. Is that accurate?
I think it's a little bit more than like the swapping out the engine. I think it's probably closer to like mobile because it's going to unlock new use cases as well. But just because mobile applications versus desktop applications didn't change, like it just expanded the universe of tech and expanded the number of things that you could do. I think crypto is similar. Like yes, you're swapping out the back end and some of the accounting system and settlement system, but there's also so many other things you can do with smart contracts that are going to unlock a whole universe of things that either weren't possible before that we didn't really imagine would be possible before. I still think just like creating scarce digital assets, whether they're fungible or non-fungible, is something that hasn't really seeped in terms of its importance to society at large. And I think that's something that, in decades in the future will be extremely obvious in hindsight. But right now it's still like, okay, you can create scarcity of JPEGs, but what does that really mean? But and for me, the answer is like, well, you could modularize your identity and your reputation system and the data and IP that you have and permission it out like, to whoever you want, whenever you want, and you ultimately control it versus like being, susceptible of being unpersoned by like an unfriendly like tech giant or, state actor, right? So like that's very powerful. And like, yes, there's going to be a lot of value that will be unlocked there at scale, even if it's not all at once. And then, obviously, I think with fungible currencies, a little bit more straightforward because people have bought into some people have bought into the Bitcoin meme. And I hate saying like we're still so early, and people are like, oh, we're in 1994, we're 19. Like I think a lot of those comparisons are bullshit. And one of the reasons I say that is like I feel like we've got a lot of overlapping hype cycles right now, like to use like the Gartner curve that everybody always talks about, or the tech installation curve. You've got kind of Bitcoin on one cycle, you've got Ethereum and layer ones and smart contract platforms on another cycle, and then you've got a lot of applications that are all on like related but slightly different parts of the curve. And I'd argue like something like DeFi, right? DeFi summer was like way back in 2020. NFTs were only hot like beginning of last year, really, like is when they started to hit scale. So you've got like an 18-month lag there. You've got the same thing with like these layer ones versus Ethereum and layer twos. So I feel like we're going to continue to see like areas of interest and heat mapping across cycles from now on, and things will start to be slightly less correlated with each progressing cycle.
So looking forward, what are some technologies or projects that you've been following that you feel are really going to come into their own in 2023? And what are some technologies that people are sort of just starting to talk about or sort of are just on the testnet phase that you think we'll be hearing more about in 2023?
So I'm really excited about DeFi, DePIN, DeSoc. We call them. So DeFi, everybody knows. My quick and dirty for DeFi is, if we can avoid the worst case scenarios on the regulatory front, DeFi's market cap is like $15 billion or something. Not even, it's like 12 or $13 billion collectively, right? As an industry. JP Morgan is 400 billion, right? So if you're thinking about financial services as like, 20 to 25% of the global economy and the things that DeFi can unlock and the rents that it can eviscerate at scale, I still think it's such a transformative component of the industry and one of the primary things that we can build around it to build a better global financial system. Decentralized physical infrastructure networks are, I think, the glue, not the glue. I'd say it's more like the steel foundation that we need. And you guys know this firsthand with was it Hertzner? How do you pronounce it?
Hetzner, yeah.
The rug pull from like one of the biggest data centers in Europe, basically saying crypto is not welcome here. Well, you know what? If AWS says that, we sure as shit better have like a decentralized hardware network that's going to be able to like run some of these applications, and we got to start scaling that up. Same thing, $5-6 trillion in cloud computing is like the market size. It's about $3 billion collectively for the market capitalization of decentralized like physical infrastructure networks or DePIN. So do you think that it's going to be more or less than 10 basis points of the global cloud computing infrastructure? I think the answer is almost certainly going to be more when you think about censorship issues and kind of geopolitical concerns. And then I think decentralized social, right? So just the current web, right? The browsing experience, the mobile operating systems, and then like the Web 2, like social giants, I think are all absolutely things that could be built around and upgraded, but with a user centric approach versus a platform and single application centric approach. So I really like what Farcaster and Lens and some of these crypto native decentralized social networks are starting to build, and those truly are like just getting into the batter's box, right? So Bitcoin, maybe it's in the third inning. It's not in the first. Like Bitcoin's maybe in the third inning, Ethereum maybe in the second inning. Maybe you guys in the other layer ones are top of the second or bottom of the first. But things like decentralized social and decentralized hardware networks, like they're literally like first pitch sort of stage. So that's what keeps me excited, and I continue to be as long-term bullish as I've ever been. We just need to not get shut down, and we gotta self-police a little bit better so that people can't torch our reputation after latching on for a couple of years of exploitation.
Love it. I'm feeling good about this year. I have to say, I think a lot of the fundamental investments that folks across multiple chains and industries have made through the start of a bear market in 2022, I think we're really going to see this is probably the best shot on goal we've had as an industry for 2023. And we'll see if we make it this year. Maybe it's next year, but
hope so.
Be good to see. Well, Ryan, thanks for joining us today. This was a great conversation.
Likewise. And best of luck to you guys, the whole community, and let's get back to work.
Validated is produced by Ray Belli with help from Ross Cohen, Brandon Ector, Amira Valiani, and Ainsley Medford. Engineering by Podglomerate.